The crypto industry is having a bad year, but it got a lot worse in November after the massive cryptocurrency exchange FTX suddenly imploded, turning into what experts are calling the worst scandal to happen in crypto's history. FTX was led by CEO Sam Bankma Fried, the superstar investor who also founded trading firm Alameda Research. Those two firms were supposed to be operating separately, but that turned out to be far from the truth, which is ultimately what took them both down. After a CoinDesk report suggested their finances might be suspiciously close, FTX found itself facing a liquidity crunch as customers scrambled to cash out. But that wasn't the worst of it. Details emerged that FTX had been in trouble for months because it had secretly spent $10 billion to bail out its sister firm Alameda after Alameda made a string of money-losing bets. That huge loan was hidden not just from the public, but even from other employees at the company. And worst of all, reports claimed that in order to finance the bailout, FTX had stolen its customers' funds. In the fallout, billions of customer dollars have vanished from FTX, and nearly $200 billion have been wiped from the crypto market. Big crypto projects have gone under before, like Terra Luna and Celsius, but those both already had shady reputations. FTX did not. It was viewed by almost everyone as a shining beacon of the crypto industry. So when the news broke that this influential firm made sloppy mistakes, or maybe even committed fraud, it destroyed confidence in all of crypto. Crypto lender BlockFi was the first to go. Earlier this year, FTX had given it a $400 million line of credit, but after the crash, that credit disappeared, and BlockFi was forced to file for bankruptcy. Analysts are now watching Genesis, another huge crypto lender and FTX client, which could be the next domino to fall. Nobody knows whether any of FTX's 5 million customers will ever get their money back. Does this mean that all crypto projects are scams? No, but if even the most legitimized firms, like FTX, can turn out to be a house of cards, it might make investors think twice before dealing with crypto, likely setting back its progress towards the mainstream by years to come. Since we first shot this video, the news has moved fast. Last week, SBF was arrested in the Bahamas where he lives, after federal attorneys in New York shared a sprawling criminal indictment that charged him with wire fraud, securities fraud, conspiracy, and money laundering in a scheme dating all the way back to 2019. Separately, the SEC also filed a civil indictment claiming that FTX customer funds were not only funneled to Alameda, but also used as a personal piggy bank to buy luxury real estate and finance campaign donations. Each of the 8 counts listed carries a maximum sentence of 20 years in prison, which could basically make a life sentence. On Monday, it was reported that SBF agreed to be extradited to the United States after a chaotic hearing where his lawyers appeared to clash over their game plan. For the past week, he's been in a Bahamian jail with notoriously harsh conditions after the court deemed him a flight risk. If SBF is extradited, U.S. attorneys will then fight to hold him accountable for the damage caused by FTX, and the many counts of criminal activity suggest that prosecutors won't pull their punches.